Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and try to help you understand how that applies to your individual circumstances and to help you to navigate the rules. So today I'm going to talk a little bit more and follow up from our previous video on selling on eBay. And before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to access other information that we have on a whole host of different topics, all aimed at you, helping you to understand tax as it applies to you individually. So previously we talked in a video about whether you would need to pay tax on money that you made on selling platforms such as eBay and Amazon. And recently, on the 1st of January, new rules came into place. And as that was all in the media, that prompted a lot of questions on our eBay video. So I just wanted to update, because no doubt I always think that if one person's asking the question, then other people are likely thinking the same question. So I just wanted to update some information on that just to clarify some things and hopefully put some people's mind at rest. So the first thing to say then is what actually changed on the 1st of January. And actually, in terms of tax and potential tax liability to on any monies earned, nothing actually changed with that on the 1st of January. What actually changed was the requirement for the selling platforms to provide certain levels of more detailed information consistently to HMRC. And again, it's not a completely new a new situation. HMRC have always been able to request information from the selling platforms. It's just that now, in some circumstances, the platforms are routinely sending the information to HMRC. So if your activities on eBay, for example, didn't previously fall within taxable income, then nothing changed on the 1st of January. They still won't. It's what really the people that really will be affected is anybody that has been earning taxable income on selling platforms and haven't been declaring that to HMRC. Really, those are the people that will be impacted. And obviously, if you fall into that category, then to make sure that you do notify HMRC now that you are aware of that. So a lot of questions surrounded when will the information be available from. So hopefully that helps to clarify that HMRC have always been able to ask for the information. It's just that from the 1st of January, they will be routinely sending information across to HMRC. And I'll come back to this further on in the video. But it is important to understand your activities on eBay and what you're selling, because it's not everything falls within the scope of the same type of tax. So for example, if you're actually making profit, then by buying and selling, then that would fall within the scope of income tax. If you're selling personal possessions, then that falls within the scope of capital gains tax, and they're both quite different. And you could be selling a combination. But on that theme, another common area of confusion is whatever tax what your activities fall within the scope of, you would only be taxed on any profits that you make. So lots of questions with scenarios where people had perhaps bought something and then sold it at a loss. and there's no profit there. So regardless whether it falls within the scope or not, there's no profit. So there's no liability to incur. And also on that theme, to understand that you're not assessing the tax per transaction, but per tax year. So what that means is perhaps you may sell something for a loss and something else for a profit. And if the loss and the profit were the same, then they would offset each other. So you would only need to keep your records to be able to show how much income that you've had for the year from different activities that fall within the different tax scopes. So what I mean by that is, say, for example, you have done some buying and selling. So you've actually bought items with the intention of selling them. That falls within the scope of income tax. Anything that you have done on that basis, you would keep records of all of the income, all of the sales, less the costs that you've incurred. So that is the cost of buying, your fees for selling on the platform, and any other costs, because perhaps you bought something and you had to repair it in order to sell it. And the cost that you spend on repairing it also would be included. So you start off with your sale, the money that you've actually taken, you take off the costs of purchase, you take off any fees, and then you take off anything else that you've incurred. If you've had to pay postage to post it to somebody, that's all a cost. That's all incurred in order to achieve that sale. And it's only what's left that would be your taxable profit or potentially loss. So you would keep the records of all of those things for the whole of the tax year, and then you would add up all of the different items, and then you would have a total for your total sales for the year, your total purchase cost, your total fees for selling on the platform, your total postage costs, your total incidental costs for if you had to repair, or sort of those kind of things. And then you would see for the whole year whether you have a profit, and if you have a profit, that will determine what you would be taxed for income tax on buying and selling, because that falls within the scope of income tax. So as I mentioned earlier, another tax that you may fall in the scope of, so if you're selling personal possessions, then that falls in the scope of capital gains. So again, you would keep a record of what you've sold through the year. A lot of smaller items that you're selling would sort of below the threshold, and even if you're selling larger items, you're allowed an exemption each year, but still we're only going to be interested in the profit that you make. That's all you're going to be taxed on. So if something does fall within the realms of capital gains tax, then you're going to still start with what you sold it for. But off of that, you're going to then compare that with what you bought the item for whenever you purchased it as a personal possession. Obviously, if you were gifted it, then there's potentially no purchase cost, although there can be exceptions to that. So if you're not sure, then of course you should always engage somebody to help you. With going back to the capital gains, again, you would be looking for the whole year. So if you have sold some personal possessions and also bought and sold some items, they would be treated separately, and you wouldn't bulk them together at any point. You would be assessing them separately. What I would say is important is if you've sold say clothes that no longer fit you, for example, of your own personal clothes, so your personal possessions, so that would be below the realms of capital gains tax, but that's what it would be in the scope of. It wouldn't be in the scope of income tax, but you would still keep records of that sale and what you'd sold, because ultimately it kind of leads on to the one of the next themes of the questions, is what records to keep. Ultimately, if HMRC have some sales records and they come to you and they say, have you made any profit? Is there any liability that you should have paid tax on? You need to be able to demonstrate. So there's no point in saying, oh, actually, I've only sold personal items. They would still need to know which items, and it's actually your responsibility to show HMRC that you haven't incurred any tax liability. So again, if you are going back to buying and selling, if you have made a loss, or even on personal possessions, because perhaps you might have bought something that you no longer want or need, and you've sold it, it's depreciated in value, and actually you sold it for less than you originally bought it for. So you still need to be able to show HMRC that information. Now, in terms of what records to be able to show, just imagine yourself if in a few years' time you were looking back, that you have enough information to be able to say, yes, I did receive that money from a selling platform such as eBay, but this is what I sold. It was a personal possession, and actually I purchased it several years before for a higher value, so I made a loss on it. Or if you're buying and selling, well, yes, I did receive this much money, but these were my costs involved. And so the records, what you need to remember is, so for example, if you're buying and selling on a platform, some of the platforms allow you to access your information retrospectively, so you could look back on there. But if you lost access to that account for any reason, you may no longer have access to be able to do that. So depending on how often you are using the platforms to sell, it could be prudent to download the records intermittently. Obviously, if you've sold items on eBay that you've bought on eBay, then the records will be there. But then you may have additional records in terms of postage costs that you have incurred, other costs outside of the actual selling platform. So you just would need to keep the records that allow you to demonstrate what, if I said to you, well, what did you sell this, what was this sale related to? And you told me, that you just are able to evidence that, because ultimately it is your responsibility, if you're asked and where money came from, to be able to demonstrate to HMRC which tax you feel it's in the scope of, and why you feel that there's no tax liability. Now, as I talked about in the previous video, if you are buying and selling, and so you fall within the scope of income tax, and it's just really a bit of a sort of a side hustle, more of a hobby, but you are actually making a small amount of profit, then there is the trading allowance of £1,000, as long as you're not also a sole trader, because that would be a separate activity. But that means that the trading allowance means that you can receive £1,000 in sales and be exempt from having to submit a self-assessment tax return or declare that income. So if you're only making a small amount on sales, then that could be useful. And this gets confusing as well, because depending on, again, which tax that you fall within the scope of, or your income falls on the scope of, there's different allowances. For the capital gains annual exemption, for example, is different to the income tax. Trading allowance and the calling it as a trading allowance also is confusing for people, but effectively that is if you are buying and selling to make a profit, even if you're doing it on a very small scale, effectively you are self-employed, and you are trading and running, albeit very small, but running a business. And then people may also have read the articles on the limits that the platforms are required to send the information to HMRC, but that doesn't mean that if you're taking less than that, that you don't need to declare it, because as I say, all these rules are changing is the amount and level of information the selling platforms provide to HMRC. They don't actually change any of the previous rules on when you are and when you're not liable for tax. So hopefully that helps to sort of people to understand that it's not a case that you've had this money from a selling platform, you've had this money from eBay or from Amazon, and you're going to have to pay tax on it. As I say, it depends what tax it would be in the scope of, and it depends it depends primarily as well if you've actually made any profit on the item, because if you haven't made any profit, then there's no liability. You only are taxed on profit, whether it's personal possessions falling in the realms of capital gains or trading falling in the scope of income tax. So the other thing to say is that again, talking about different allowances, if you say, for example, if you have no other income, no other taxable income at all, and you make a profit by buying and selling on a selling platform such as eBay, and it's over £1,000 sale, that's not profit. The trading allowance, that only relates to the money coming in. But say, for example, that you've made profit of below your personal allowance and below the any national insurance required for self-employment, then it doesn't automatically mean that you have to pay tax, but it will be added. Any profit that is taxable profit that falls within the scope will be added to your other income for the year. And we have other videos where we talk about side hustles or two sources of income and how that works. So for example, if you have a full-time employed job and you're paying 40% tax, and then you make some profit on eBay and you make a few £1,000 profit, then the profit would be taxed at 40%, because that is your relevant rate of tax. But as I say, we explain how those link together in our video on side hustling. So the next question that has been asked a few times is if you have made some profit and it is actual profit, you've taken the sales, you've taken off all your costs, and you have made profit, and you are buying and selling to make a profit, so it falls within realms of income tax, and so therefore you need to declare that income. Will it affect your benefits? Then yes, it would be income, so you should advise whoever you're receiving your benefit from, depending on which benefit, you should advise that income to them. Another question and we had a few of that I'm afraid I'm not actually able to give a definitive answer, is the question of if you are doing charity sales on eBay. And the reason that I say I can't give a definitive answer is because it doesn't seem to be completely clear how this is treated by eBay. So let's forget about the sales platforms. Let's just say, for example, that you were self-employed as a sole trader, which is what anyone is that is buying and selling to try and make money on eBay. So let's say, for example, that you are doing that, and then you make a donation to charity completely separate, then the two items would be treated completely differently. So the charity donation wouldn't be an allowable cost of the sale or allowable business expense, but it may give you relief on if you are a high rate taxpayer. So this is where the confusion lies, because if you look on eBay's profit calculator, it actually allows you to put in the sale and then it calculates the eBay fees, but you put in any charity donation and it then deducts that. So that suggests that it is an allowable expense. However, in a different section, eBay also say that they treat, if you are donating, so say for example, if you sell something for £100 for charity, that they treat that donation that goes to the charity as taxed income and allowable for gift aid. So that's kind of going off at a tangent, and so I won't go into those two in detail, but what I'm saying is that the information is conflicting of how that charity donation, it seems, obviously it does seem logical, and I'm not saying what, I'm not expressing any opinion on, which is right or wrong, but I'm just expressing that if you are selling as an individual seller, if you're selling, you can sign up and actually be a seller for the charity, and that would be different because you'd be selling the items not for your own account. But obviously, if anyone does have any information on that, then please do drop that in the comments. And as soon as we can get any clarification, but if anyone is buying and selling and donating that to charity, just be aware that we don't have a definitive answer yet on how that would be treated. Again, we're talking about tax rules here and how the rules would be applied. I'm not making any comment on whether that should be taxed or not. But what I believe is important is that if you are engaging in an activity, that you understand how the rules work so that you can be aware of any implications. And this potentially is a little bit of a grey area. And so that is why I don't want to give a definitive answer, because the rule suggests that potentially that would still be income for yourself, because eBay themselves are saying that they treat it as taxed income. But if the charity donation is taken off of any profit that you make, and therefore there's no profit, it's not taxed income. So this is why I'm a little bit concerned to try and get any sort of guidance, and as soon as that we can clarify that, I will obviously update that for you. One final scenario to run through that, again, we've had lots of questions on, is a scenario where you buy something off a selling platform, say eBay. You buy something, you buy an item of clothing, it arrives and you don't like it, or it doesn't fit, and so you are not able to return it for whatever reason, or you choose not to, and you sell it. And so how would that be treated? Would that be a personal possession, or would that be trading? And of course, so this could be a little bit of a judgment needed, because what I would say, it would depend on how often you're doing it and whether you are making a profit from it. So if you occasionally buy something, you don't like it, so you put it back on the selling platform to sell it, then that then there wouldn't be any implications, and the chances are that you wouldn't be receiving income over the £1,000. So even if it did fall within trading, it wouldn't be sufficient to trigger any requirement for you to do anything. If you are every week buying clothes and putting them back on the selling platform and putting them on for a higher cost, and then obviously you are making a profit, then that obviously wouldn't be a genuine buying and sort of selling. So what I'm saying is, if you are genuinely buying things and then selling them because they don't fit, and that's a sort of once in a while, then of course that's quite straightforward. If you are doing it really often and making sort of making profit from it regularly, then I would say you would find it difficult to argue that that is genuinely buying and reselling. So therefore you would still want to keep the records, even if you believe that you can justify the buying and selling and that it was just an accidental purchase. Well, of course, like I explained earlier, only the profit of anything is going to be taxable. So therefore, whatever you sold it, you're going to take off what you purchased it for. You're going to take off the postage that you've, any sort of packaging. And so if you're still then making a profit on all of the items, then inevitably that would fall under the category of trading. But if you do feel that it is justifiable, then again, this is obviously a very generic video, so we can't look at every scenario. But if you are confident that you can justify your activities as that, then you should still keep the records, so that in the event that HMRC determine differently, you still got those records to show any costs that you've incurred, and again, only ending up with the actual profit. So lots of things that I've run through there, but I felt that it was important to just sort of do a follow-up to that, our previous eBay video, because that was published some months ago before the announcement. And I appreciate that the announcement has caused confusion to people. So as I say, the important things to remember is, just because you've had money from a selling platform, and apologies because I do I'm conscious that I keep referring to eBay as an example, but it is all of the selling platforms. So anywhere that you've made sales fall within this. So it's important to understand what your activities are. So whether you're actually buying and selling, or whether you are selling personal possessions, or whether you've bought something and it's not quite right and you're sort of selling it on, then you can understand which tax your activities fall within the scope of. You may fall within the scope of more than one tax, and therefore you should keep separate records for whichever transactions fall within the scope of each. You're looking at the overall tax share of the sales and any costs. So if you are trading and you make a loss on some things and a profit on others, then yes, they will offset each other within a tax year. Again, that gets a little bit complicated, because if you make a loss in one year, you could carry it forward, but that's really beyond the scope of what we're talking about. But in any case, if you are receiving income from a selling platform, then it is really important to keep records that you can access, and you should keep those for 6 years to make sure that you can demonstrate, if you're questioned in the future, why you felt that your activities didn't need declaring, or why you felt that no tax was due. And if you have any liability, if you have any profits, how you've calculated those. So I understand that that's, as I say, a lot of information, sorry, all in one video, but I guess that we have had a lot of questions on across our social media. So I wanted to try and cover the main themes that we'd seen to help to clarify, and it's clear that there are a lot of people that are worrying about what's going to happen and whether they're going to have to pay tax when they haven't made any profit, that they've made a loss on whatever that they've sold, or that they don't actually fall within the scope. And if you are unsure, then I would suggest that you take advice. If you need any help to determine that, if you engage a professional to help you, as I always say, please do make sure they're qualified for the advice that they're giving you, that they are a member of a professional body if appropriate, and that they do have indemnity insurance. It can be complicated, and if you get it wrong and you don't declare liability that you should declare, then of course that in the future, then that can be quite costly in penalties, as well as by that point you may well have spent the profit that that you'd made. So you should obviously always try to pay your liabilities out of the profit that you're incurring. So hopefully that does clarify some points and set some minds at rest. And thank you very much for watching. And please, as I mentioned earlier, please do subscribe to the channel. It will help you to navigate back to this information if you need to refer back to it. Thank you. Goodbye.